the industrial sector will remain very strong. I can't see the appetite for that asset class reducing over the next 12 to 24 months, just given the structural shifts that we've spoken about earlier. So clearly that's going to continue to be quite an attractive asset class, and I still think there is some cap rate compression to come through there because of the cost of debt and comparatively to other markets around the world. From an office point of view, our view is that it's still going to remain an extremely important part of the way business operates. We still think the advantages from being in the office outweigh those from working from home, whether that be from a collaboration point of view, observational learning, and also just the fact you need to separate your work life and your home life for both of them to actually prosper. Because as we know, with working from home, it still obviously is a good option for flexibility, but in terms of doing it for a majority of your time, I just don't see it being a positive for the ongoing performance of businesses. So we think there'll be a bit of a rebound in the office market, but we've seen also that core office properties have continued to price really strongly, even during the pandemic. Good assets with long WALEs and high quality covenants have traded at prices that have been at pre-pandemic levels, and in some instances even sharper. So we do think that it will remain a resilient asset class into the future. And there also may be some buying opportunities in that secondary market for assets that have been hit a bit harder, that you could potentially buy at discounts and then reposition and release during the market recovery phase. Look, and finally on a retail point of view, I mean, that's not something that we invest in at all at the moment. It's not to suggest that we won't ever in the future, but we specialise at the moment in office, industrial and healthcare sectors. But I think it's going to be a challenging environment moving forward, or continuing to be a challenging environment in your traditional retail sector, especially for discretionary spending. Grocery anchored sort of shopping centres with some specialties, if you can get a decent price, might perform quite well, but overall we think retail is going to be hard.